Are you buying a house in 2023? Well, this video is going to walk you through from start to finish exactly what you need to know, some pitfalls, as well as some different advice on how to get from here, I want to buy a house, to holding your keys and opening your new house. Okay, first and foremost, there's a lot of misinformation. Say you want to go talk to a real estate agent first, but I disagree. You want to talk to me, a mortgage broker, first. So, how are you going to go shopping and not know how much you can spend? Like I said, I'm a mortgage broker. I'm Emmett Dempsey with Treasure Coast Mortgage here in Port Saint Lucie. Definitely go ahead and leave a like in this video, or wake up the YouTube robots, let them know you're still there, or leave a dislike. You do what you got to do. Go ahead and leave a comment. Are you looking to buy a house in 2023? You have any questions? Go ahead and leave your questions in the comments. That'd be awesome. So, okay, first step, go talk to a lender. So you go talk to a mortgage broker like me to figure out what your affordability is. So we'll look at your income, your debt, and we figure out your max affordability. So we figure out, based on your debt to income, what's the most houses you can afford. And really, when you get pre-approved, you don't get pre-approved to I'm approved for $400,000. Like, what does that really mean? You get approved for a payment, okay? Because we live our lives month to month. So our mortgage qualification rules at this time are all debt to income based for forward mortgages, okay? So we look at your debt to income. For most standard owner occupied forward mortgages, it's a debt to income standard. So you got to lender first, find out how much you can afford, and then we get you pre-approved. Now, to get you fully pre-approved means we get all your documentation in. So we get everything in. We get your pay stubs, your W-2s, your asset statements. Make sure there's nothing out of the ordinary to make sure it's fully underwritten pre-approval. So when we get it, we can send it before an underwriter if we need to. But my team is very good. In fact, my loan partner is a former underwriter. So my team and I, we work it up to make sure that there's no pitfalls, and then you get fully pre-approved. Now, and if you haven't found one already, the next step is to find a real estate agent. Now, I certainly have a lot of realtors, wherever you may be, that I've worked with in the past. You want to check them out and just Google them. Heck, you can Google me and find all my reviews, that my clients have left. You want to work with somebody who's experienced, in this field, that can help you and that knows the market of where you're at, and that knows the neighborhood of where you're at. So there's a handful of, there's a bunch of great realtors, and using your friend's sister's brother's uncle's cousin who just got into the real estate business to help them out, you don't want to do that, guys. Just don't do it. So use an experienced full-time real estate agent. Okay, that's my recommendation. Might ruffle some feathers, but that is, in my experience, whenever they're trying and help a friend out, that doesn't work out well, guys. Use an experienced real estate agent that knows the market and has a lot of good reviews. Find them online, or I can definitely recommend one that I've worked with and I would vouch for and put my reputation on the line for. So that's the next step, is you find a real estate agent. Okay, cool. So you have your pre-approval, and then you have your awesome real estate agent that you jive with. You have your awesome real estate agent that you vibe with, and then you start going out shopping. Now, a lot of times your realtor will send you listings that you can kind of look at. They'll send their MLS listings, based off your price range. They'll say, hey, Emmett, how much are we pre-approved for? $500,000 or whatever it may be. The type of financing, because right now we're in a kind of quasi buyer's market. At the end of the year, after we had a huge 2021 where it was overlist things, things were kind of calmed down a little bit. Buyers are getting their offers accepted, FHA and VA offers are being accepted. So we figure out your price range. So you look at all those amenities, when bedrooms and bathrooms, pool area, schools, all the things that are important to you about where you want to live. You work that out with your real estate agent. For us and our team, we make sure that you can buy the house that you want. Okay, so you'll look through that list. You'll find a handful that you want to actually go see in person, and then your agent will arrange some showings. Okay, so they'll walk in the house, walk around, and they'll show the house, and then you decide if you like it. So I recommend you look at a few houses that hit a lot of your major things. Okay, so whether it's bedrooms, bathrooms, pool, school district, or what have you, make sure it hits as much as you can in a price range that you can afford, and then if you need to bump your range, we can see if there's anything we can do, maybe pay off some debt, kind of engineer. Every buyer is different. Some have more assets than others. Some are just getting in their minimum down payment in. So it all depends on you personally what you're able to do. If you're able to get a gift to help subsidize some things, maybe you ask your realtor ask your realtor to ask the seller for some concessions, and maybe you can make all the numbers work. So, and then if things change, my team and I can definitely take a look at that. So, once you find the property that you love, okay, cool, you love it. Now you're going to make an offer. Okay, so you tell your agent and yourself will decide what the good offer price is in different terms. Your agent submits the offer, and then usually the listing agent on the other side on most cases, and then you can go back and forth and negotiate whether the deal, the terms, who pays what have you. Okay, say your offer is accepted. 100% of the things that you want are accepted in a perfect world, but we're gonna cross our fingers and hope that happens. So you're gonna get everything that you asked for. So you go ahead and send it out. You made the offer, and the offer is accepted. Okay, now we enter the contract phase. So the contract phase lasts about 30 days, 45 days at the latest. It usually depends on when the seller has to move. Our policy is we run to the finish line and get it done as fast as possible, and then we say, are all parties ready? Okay. So there's a few things that we have to do. So then we go in and you work with our contract team. For my team, my wife Cheryl is my contract processor. She has a contract processing company, and so you work with my loan partner Jennifer, and as well as Cheryl, my wife, to get to the closing table. So you go over the lock pricing. It's basically you and I will have a discussion. Okay, so let's go and lock the rate. Majority of the time, if you like the rate, rates don't change that much in that quickly in the window in that contract phase. So you would generally want to lock the rate, at application. Basically, once we have have the contract accepted, you say, okay, cool. We're in this window. Let's go ahead and lock it for however long the contract period is, and we lock your rate. And then we send you out your loan disclosures. Okay, one of which is the loan estimate. I did a video here about the loan estimate. You can check that out there. So you get your loan estimate, and then you'll e-sign your documents. So basically, you can e-sign them on your phone, super easy. So once you sign those, basically once you sign those, it's your intent to proceed. Okay, so the next step would be your inspection. Okay, so the inspection technically is voluntary. However, in my book, I think it should be mandatory. It's not 100% mandatory, but you should strongly get a home inspection. Now, the home inspection belongs to you. Now, what we'll need out of the home inspection are the insurance inspections, usually your wind mitigation report and your 4-point. Okay, so those will determine the age of the roof, the age of your major systems, and that's how insurance companies are. And that's how they quote your insurance. Okay, they're not going to quote it without it. And if you're in a flood zone, sometimes you'll get an elevation cert to see how what part of a floodplain that you may be in if you need to get flood insurance. Okay, so that's what happens during the inspection phase. So so you get the inspection, you get the report back. If there's something that's a deal breaker or like you have a few outs in your contract. Okay, so basically that's one of the inspection period is one of your outs. And that's one of the things you negotiate in your contract, 3-day, 7-day inspection period that you have to inspect the property and say, yes, I'm moving forward, or no, I'm not. Okay, so basically, let's say that you decide you did inspection, everything's good, you're moving forward. So we'll generally hold off on ordering the appraisal, because that's really the first time that you spend money because you pay for it on a credit card. So we'll go ahead and order the appraisal. So when we order the appraisal, we do all the things what we call order outs. So we order title, appraisal, we get insurance quotes. We do all those things. So you've inspected the property, and then you'll start to make arrangements to move. So once we're past inspection period, we're kind of almost it's basically about 99% of the time it's going to go all the way to funding. So we've ordered the appraisal, did all the order outs, did title. Assume everything comes back good. My team, once we have all your documentation, at that time we're going to submit your loan to underwriting. Okay, so what underwriting does is they look at guidelines, based on what your particular, if you're going conventional, a VA, FHA, whatever it is, depending on your scenario. And we've already worked all that out all the way at the beginning. So we already know, like when it goes to underwriting, it's not a question mark or like we're crossing our fingers. It's more just a rubber stamp. Like my team and I, we know what's gonna. We identify all those pitfalls initially. So when it goes to underwriting, it's just smooth sailing. We have underwriters that underwrite in a day, to get your official loan commitment. Okay. Now in the state of Florida, the definition of a loan commitment has changed. So you need the appraisal back. It used to be where it's just a simple loan approval by an underwriter was a loan commitment. Nowadays, you need the actual appraisal back. So once value is considered, and once the appraisal is back and it's underwritten by an underwriter, we can issue a loan commitment, and then that's another one of your dates in your contract that you have to fulfill. So, once you have your inspection, you pass that, you have your loan commitment date, you pass that, there's really, very little outs after that date. So basically, you decided, yes, we're moving forward with that contract. So, okay, so you got your loan commitment back, you're moving forward with that contract, and then we get to the end. So once we get the initial approval, there's going to be some conditions on that approval. No matter how clean, what we do up front, there's always approved with conditions. In my entire 15-year plus career, I've never gotten a one-touch CTC. Like that's kind of like a unicorn. Okay, so don't feel bad if you say, well, we have some conditions. It's okay. Everyone has conditions, even the most 800 FICO borrowers. Doesn't matter. There's always a condition. Usually, some boilerplate conditions come out. Usually, they want to look at your credit inquiries and explain that you applied for a mortgage. Okay, I know apply for a mortgage because I'm talking to you, Emmett, right? Well, again, it's a lot of it is check the box stuff. Okay, so yeah, so you identify all of your inquiries, make sure you didn't open any new credit cards or new car payments, because that has happened, guys. So there's a reason why they do all this stuff, because they want to make sure that you didn't open any new debts or things of that nature. Okay, so once we clear all the conditions, mainly it's just asset conditions, like we'll verify your escrow money deposit that you used to secure the contract. You verify it cleared your account. We verify any assets. We identify any large deposits or a gift. Again, your situation is going to be different. So we verify all those different things. And once we verify that, we get what's called a clear to close. Yay! Okay, clear to close. Okay, so once you're clear to close, we look in, I check with both parties and say, okay, cool, the contract date says this. Anybody want to close early? A lot of times folks want to move back the closing. So that's why when we bind your insurance, we usually bind it for a couple of days before the closing of the house. And so because it always happens, there's usually a couple of days that all parties want to close. And of course, if you want to get in and buy the house and get you a few days in order to move in. So now you're clear to close. All right, cool. So what then? So once you're clear to close, we figure out a closing date. All right. So then we arrange for a closing. So what that means is you're going to wire your funds. Okay. So you're going to get wire instructions from the title company. Like you'll never get them from me or anybody else or in an email. You want to call them on the phone and get your wire instructions to wire your funds over. Now, most of the time you have already wired your funds for your escrow deposits. You have that information. But you want to verify again that you have the right wire instructions, because wire fraud is a real thing. It's a real danger. Definitely be aware of it. Okay, so you're going to wire your funds. You're going to show up to the title company. Most times you'll go there. At that time, the wire from the lender have already been sent, and it's pretty much done. You sign all your documents. If I can make it, I'll show up and congratulate you on your new house. You sign the documents, the closer submits them into the portal, and then you're funded. There you go. Those are your loans funded. You get your keys, and you are now a homeowner. Okay, so that's the loan process. So that's loan to funding. For me, my clients, you're going to hear from me every year. I also do an annual review. We make sure that you file a homestead, all those different things after funding. Because it's not just about a transaction. I want to be your mortgage broker for life. To help you and your family for every house you're going to do, and anybody that you know is going to do as well. So, at this point in the video, you go and check out this video here. That's what's going to happen. Thank you so much for watching, and I'll see you on the next one.